Hey everybody, how are you today? Hope you had a nice weekend. Welcome to Stock Trading Pro today. A lot to talk about today. Today's Stock Market Live, we're going to break down obviously the big story of the day. Probably the biggest one in a while is the 20-to-1 stock split for Amazon. We're going to break down a big list of stocks to trade. We're going to talk about the number one stock market news that everybody's going to be paying attention to this week, which is probably why the market went into a holding pattern last week. And we're kind of sitting right now in the bubble of where short sellers are kind of getting ready to be scared. Maybe even this morning with the way the stock futures are up this morning. Bullish traders are not ready to get aggressive until the news that we're about to talk about and whether or not that actually plays itself out into a bigger way. So really the bottom line, we had a big call yesterday, our weekly swing trader call, which we have Sunday morning at 11 o'clock. We broke down what we're expecting this week, and we got a big list of stocks to trade. So if you're wondering what the next big move is in the market, we're going to talk about it today. We're going to outline now Monday, before the market even opens, what we're expecting to have happen this week, how we plan on trading it. We're going to build a list of stocks that we're looking to buy this week, the best stocks to buy now. We're also going to build a list of stocks on the short side of the market. For those of you that are bearish and understand short selling to trade stocks in the other direction. We have a ton of stuff today. I'm really excited. I got a big list of stocks I want to share with you today. Some stocks on the long side, some stocks on the short side. Either way, we're going to be prepared to make money today. So we have a ton of stuff to talk about. Stick around. I'll be back in just 1 second. Okay, so thank you so much for joining me here today, everybody. Obviously, everything we talk about here today is for educational purposes. It's up to you to make that final decision, up to me to help you make better decisions. So we're actually going to jump right into it. I want to talk about some of the big things that are going on right now. Obviously, the futures are up again here this morning, 45 points, which quite honestly is, I'm not going to say shocking as much as unexpected. We did rally off the lows. We had those bullish gaps 2 weeks ago. Last week, the short week, we just kind of hung out and did nothing the entire week. Much more of a day trading market, maybe even if you're swing trading, shorter term swing trades, unless you were in the energy stocks. Energy stocks were the best stocks to buy last week. They did pause for a couple of days, broke out, pushing through to new highs. Different headlines every day about oil, but right now that big blue line is still pointing higher. I do want to break it down, though, because we really need to determine what happened last week and how last week's price action translates into this week. Now, the biggest piece of, I don't want to say advice because I'm nobody's financial advisor, but the biggest mindset thing to go into this week is let the market tip its hand. And we might have seen that already this morning, this higher open outside of the price action right now. But I want to show you what I mean by that. So obviously this is where we are right now. We are up quite a bit, but this is really what I want to point out last week. So basically, if you remember, when did we do? We did our last live stream. First live stream last week was Tuesday. And on Tuesday, when we came back from the 3-day weekend, we actually said, and you can go back to that videotape, we said that the best thing that can happen for the bullish argument in the market is nothing. We literally said that short covering rallies are fast to the upside. And when the short sellers are still around, they take it right back down very quickly. So if you're not familiar with a short covering rally and what that means, we'll just go to the chart really quick. It means that when there's an environment where people are betting on the market going down, in order for them to get out of those positions, they have to buy the stock back. And that happens quickly because exiting a position happens much faster than starting new positions. So many people saw this as a short covering rally. But what we talked about last week, and again, go back last Tuesday morning, we said that if the stock market does nothing, and we actually said for the next 2 days, if the stock market does nothing on Tuesday and Wednesday, that's actually a very bullish sign that the short sellers didn't come back in and push stocks back down. And again, we talked about holding the bid. So if you want to really learn good trading terminology and make things easy for you, you could imagine that a big buyer is sitting there and people are selling because, again, in the big picture of the market, we're going down, right? So if everybody's looking at the market going down and people are selling, but the stocks or the market does not go down, that's what we call holding the bid. So if they're holding the bid, that's actually very positive price action that somebody with deep pockets is sitting there and saying, no, I believe that the short-term future, or maybe even the longer-term future, is going to be higher. So we're just going to sit here and take on all of this selling pressure. So they're holding the bid. So we were fortunate. We got the exact price action that we were looking for last week. So coming into the week, you can see there's Tuesday, Wednesday. We're like, all right, this is pretty darn good. You start to sprinkle in volume in there. Volume wasn't like this. It didn't explode. If volume was heavy here, we would have fully expected to move back down to the downside. Then actually looking pretty darn bullish there. And then Friday was a big nothing. So what did we actually get last week? What did last week's lack of activity actually tell us? Well, it told us that the bears are not necessarily ready to keep pounding the bid and see stocks go down. And it told us that some people are positioning for a potential stock market rally. Now, the big question is, what is everybody looking for? What is everybody waiting for? We're going to talk about that in just 1 second. And stick around because we are going to go over a big list of stocks to buy heading into this week. And short sell. We're going to be prepared for both sides of the market. And I'm going to tell you why in just 1 second. So really the bottom line this week is we had a lot of indecision on Friday, quite honestly. Friday was actually the perfect illustration of the entire week where nobody was taking big positions. We're all waiting for what's going to happen this week. Now, here's the thing that I want to point out to you, and this is by far one of the biggest reasons that smart traders get hurt, for lack of a better way of putting it. We actually did a video a while back about where smart money goes to die. I'll actually post that video here. There'll be like a little thing above here. And essentially, it's when there's a potential change of trend. We call that a PCOT, potential change of trend. You as a trader need to learn to recognize these spots of where there's lack of opportunity and then simply lay back and say, I'm not going to throw money away simply because the market is open. I only want to put my money in harm's way when there's a good chance of my profit target being hit versus my stop loss. Now, a lot of the arguments that we've been building for good ideas have mostly been on the weekly charts because the bigger picture is still bearish. The short picture is bullish, which means that we're leaning on weekly order flow right now. And that's a big thing to understand. But what is everybody waiting for? Well, I think that we can really all agree that this is really what everybody's waiting for right now is this, okay? The inflation report, the CPI data heading into the end of this week. So some people are saying that we're still in a bear market rally and that we're going to end up seeing the market move to the downside. So a bear market rally means that this selling pressure is nothing more than relieving this selling, and then we're eventually going to move back down to the downside. However, if we dive a little bit deeper into this, what everybody is looking for is the inflation report that's coming out at the end of the week. Once that inflation report comes out and the numbers that we're looking for come out, that's going to dictate the next big move, okay? So what are we looking for? This is the terminology that everybody's looking for. Has inflation peaked? Are we going to see inflation slow down? If CPI comes out near consensus, investors could feel better. So think about what's going on here. How does this all tie together with why we might believe that stock prices might be ready to take off? Well, let's think about some of the reasons why the stock market fell, why the stock market crashed in 2022. Quantitative easing finished, right? They stopped buying that. The money supply changed. That was one reason, which was the big reason that the market rallied so hard for 2020 and 2021. Also, the Fed saw inflation starting to go higher. And we can all feel that, right? Who's not feeling that in their wallet or their pocketbook right now? Go to get gas. Gas seems like it's going up or down, pretty much up every other weekend right now, especially go buy lunch right now. It's probably 30 or 40% higher than what you normally paid. That's where inflation starts to hit us. So if we're looking at the consumer price index, that's the prices that consumers, us, are paying. Now, one of the ways that the Fed tries to decrease what we're paying and the pain that we're feeling in our wallet right now is by raising interest rates. It's really the Fed's main tool to calm inflation by raising interest rates to bring CPI, the consumer price index, down. So they've started to do that. Obviously, they have done that a couple of times already this year. Now, actually once this year, but twice recently, the last two meetings. The last one was 50 basis points. So now what we're looking to see is the short-term data, the CPI numbers that are coming out showing that inflation has peaked and by telling us that it's decreased. That's what everybody's looking for. And that's why everybody's kind of waiting on pins and needles right now for the next bigger move. That does not mean that we can't take advantage of opportunity right now. My gosh, there is plenty of opportunity. The earnings plays that we had last week, and I'll just give you a couple of names just to give you some ideas of, we're going to get a bigger list, but some of the ideas that we were playing last week. DKS was a big one. You can see this giant move off the lows. Macy's was a big one. NVIDIA was a big one. There were some pretty monstrous moves off the lows coming off of earnings. Oh, I'm sorry, you couldn't see those charts. NVIDIA, Macy's, Dick's Sporting Goods. Those were some of the bigger ones that we played heading into last week and took advantage of. So now the technicals are going to take over a little bit more this week. And if we break down the technicals a little bit, again, getting back into the weekly charts, which I want to zoom on out to that a little bit just to give everybody an idea of what we're going to be looking at in game planning for the week. You can see this is the daily chart over here right now. But we want to break it down into the weekly chart. So what we're seeing on a lot of the weekly charts are moves like this, where we traded below the previous week, rallied back up, and now we call that a bullish U-turn. Best case scenario is a bullish U-turn actually would go well bid. And we actually did not see that in Dick's Sporting Goods, but we do want to see some of the major ETFs. So I just want to break this down a little bit for you, because this is how you start to work through the market. So you can see here, obviously, there is buying pressure already in the energy stocks. And I want to give you a breakdown of some of the energy stocks that we're going to be continuing to watch this week. Obviously, we're going to be watching CVX. We're obviously going to be watching Exxon. Some of the other stuff in that group, EOG, EOG, VLO, FANG, also in that group. So there's plenty of opportunity right now on the energy side of things. Now, the interesting thing is energy stocks, while they did go well bid on those weekly charts, they actually closed below the opening price. So there's long-term buying pressure in the energy stocks right now. Again, feeling it at the pump. I don't know about you, but I'm going to Costco now for gas. I don't know if I've ever done that before, but we're making that trip over there this week. It's like 25 cents a gallon cheaper, which that matters right now, right? So although they turned around a little bit last week, there's still buying pressure in the energy stocks. However, in some of the other sectors, which I want to break down for you right now, they're offering short-term opportunities. And there's 3 different sectors that I want to point out to you right now. We're actually going to get into some stock picks. So if we go over into our sector rotation, so this is obviously sector rotation coming into Monday. You can see the monthly picture. The last 4 weeks is not really that stellar. The only one that's still really at the top of the list here right now is energy. Let me actually make that a little bit bigger for you so you can see it. But what I want to do is I want to focus over here on the top 3, and maybe even we'll dive a little bit into the industrials. But we're going to start out with consumer cyclical. Okay, so we want to start out with consumer cyclical, and we're going to look at some of the daily charts actually, because this will give us a little bit of a better feel for some of the ideas. So one of the, it's actually interesting. One of the questions that we get from in the comments is whether or not these are actually stocks that are in my daily game plan every day. And yeah, they are, because I want to show you what I'm watching, because if I do my job, I'm helping you identify ideas, again, that have a high trade expectation. A high trade expectation means that the odds of it moving up to your initial profit target are greater than it moving down to what you would perceive as your stop loss. Now, again, does that mean all of these trades just go straight up? No, you don't need them all to go straight up. You only need a few to follow through in a bullish way in the direction that you bought the stock. As long as you kick out the losses and understand that trading's a business and you get out of a losing trade that's not working out, the real skill in trading to improve, obviously, is learning how to hold on to the winners. Now, I will admit the current market conditions, the current stock market has been a little bit less obvious. We've been going down to sideways. So right now, really, the big picture is more bearish to neutral, if anything. So again, bearish means that we're below the 50-period moving average. You can still see that the move is pushing down, but now we're kind of sideways. So that means that what we've been doing on the swing trading side of things has been a little bit more. We've had a big list of swing trade stocks pretty much every day, but the profit targets on the swing trades have been moving more from 3-to-1 to 2-to-1, and then being more aggressive with booking profits in the current market conditions. If the inflation numbers kick out this week and give us a really good direction, obviously where stock futures are much higher right now, then maybe we could lean into a little bit more share size. Maybe we could lean into holding a little bit longer. Maybe we could shift over into our profit maximizer and try and get those 5, 10, or 15-to-1 gains on some of those winning positions. But I want to be clear about this because I think this is something that a lot of stock traders maybe just aren't aware of. I don't want to say don't know, but maybe just aren't aware of. But again, it's very similar to driving. You might want to do 65, but if the conditions don't call for doing 65, you have to take what the road is giving you. So right now we're in a little bit more cash flow mode. We had a great question last week on our coaching call was, what does it mean that you're trading for cash flow? What does it mean that you're trading for momentum? Excuse me, I want to just say hello to somebody. I want to say, hey, Sunil, good morning. Welcome to our boot camp this week. And Don and LJ. I just want to make sure I say hello to people in our community. It means a lot to me that they're in there. Also, Minvai. Good morning, Min. So essentially what we're doing when we're talking about trading we have two different types of profit maximizers. One of them is a trend following profit maximizer, and one of them is a momentum profit maximizer. Now, you don't necessarily choose to use each one by themselves. Essentially what you're doing is you are looking at the market conditions and then choosing the appropriate profit maximizer for those market conditions. So because the market's a little bit choppier right now, and it's certainly not really bullish other than a couple of sectors in the stocks that we just looked at right now, that means that we're mostly using the momentum profit maximizer, which means when stocks move in our favor, we look for these signals to move up our trailing stop loss. And instead of adding when a stock slows down, expecting another bigger move, because the market conditions are tougher right now, when stocks move up, give us the signal, we move up our trailing stop and we're more inclined to be exiting those trades for cash flow. So momentum trading, in the way that we're looking at it in the big picture, is when stocks are not as obvious, but still valid. We're looking to book profits quicker and take cash flow instead of looking to those bigger wealth creating ideas. So I want to get into some ideas, despite the fact that the market is a little bit neutral right now, even though it's up this morning. We're going to start out over here with some ideas in consumer cyclical. So a couple of ideas on the consumer cyclical side, and I'll walk you through exactly what I'm looking for. CPRI, you can see now that the stock has broken this downtrend here. Not only has it broken the downtrend, but a classic a classic double bottom. We also rallied off the low, pulled back. And once we took out this level here is where we started to get bullish on this idea, despite this is pulling back. But what's most exciting to me now is we've actually rallied above what is the key moving average for, if you understand Dow theory. If you've ever heard Dow theory in the market, there's always three different moves going on at one time. And you really want to learn how to stack the order flow within the context of those three moves. There's the longer term bullish or bearish market, which a lot of people use the 200 period moving average for that. Then there's what people call the intermediate term trend, which a lot of people like myself or swing trading, we use the 50 period moving average to determine, is this stock a valid buying opportunity based on the intermediate term trend? And then you have the minor fluctuations that go back and forth. And a lot of people will use the 10 or the 20 period moving average for that. So these stocks, especially this one here, CPRI, not only had a double bottom where buyers came in and held the bid, pushed it up, and now it's pausing at a key level. That tells me now it's interesting. Not only did it push up and hold this level and break this key resistance, but it also traded into what's known as a bullish engulfing candlestick on Friday, which is a powerful signal. It took out Thursday's low and took out Friday's high and closed strong. Now, what's super interesting about that, not only is a bullish engulfing candlestick pattern strong, but think things through. This is really where you start to elevate your game. What did the market do on Friday? The market actually closed down on Friday and closed near the lows. This stock actually did the opposite. So it actually has short-term relative strength to the market. Okay, so we're breaking down some stocks in consumer cyclical right now. So CPRI, we're also going to take a look at BHI, and you can see very similar pattern where in the longer term move, this stock has now broken this big move to the downside. And by itself, that's not necessarily enough, but we did have buyers step in here. We did see some larger volume come in at those lows. We've now pushed up, and now for 5 days, including another bullish engulfing candlestick, showing some strength. Last one in the consumer cyclical, which I know a lot of people are pretty excited about, the electric vehicle industry catching a little bit of a bid. This one's kind of more on the bubble right now. It did push and pause and push and pause. And now you can see it's actually got a consolidation day. So the difference between LI in the consumer cyclical compared to some of the other ones, this one is above the 50-period moving average. And the last two that we looked at actually were bullish engulfing candlesticks. So that means that they completely took out the previous day and closed strong. LI, while it's still above the 50-period moving average, it traded into the opposite. So what I'm calling this is it's a consolidation. A lot of people know this as an inside candle, and it's actually a breakout play. So it got back above the 50-period moving average. So now we're looking for it to break out. Now, one of the things with consumer cyclical, obviously, you got to look at the big dog in that industry, which is obviously Tesla. And boy, this stock has been having some really interesting price action recently. And technically, it's still bearish. It's up a little bit this morning. But here's a big part of trading as well. If we're going to look at LI in consumer cyclical, then you need to have a big basket of other stocks to monitor to say, is order flow going into this group of stocks? Remember what we talked about before, that if you understand taking your losses as a part of the business, then the second part of improving your trading skill is when and how to hold on to the winning trades. Well, we're going to do that right now with the electric vehicle stocks. So if we know we're looking at LI, we know that Tesla, TSLA, is one of the other big, if not the biggest dog in the electric vehicle stocks. What other stocks in that group could validate me wanting to be a buyer of LI? Well, we're going to put a whole bunch of other stocks. So what you want to do is you want to take these stocks and put them in a watch list. So if they're all green at the same time, you're like, okay, this is cool. There's a lot of money going in there. So why would I book a quick profit if there's money order flow going into those stocks? This is kind of an advanced thing, but it's a really easy thing to implement. So if we're looking at being a buyer of LI, which traded into that pause on Friday, we'd have to put Tesla into that watch list. We'd obviously, even though they're not the most exciting stocks, we still have to put GM and Ford. We'd have to put Rivian. We'd have to put Lucid. We'd have to put XPEV. And of course, we'd have to put NIO. Now you can see a lot of those are trading higher right now. And actually, you can see we actually have an inverse head and shoulders bottom here in NIO. And that's generally a bullish pattern, which you can see that it's rallying. So what we actually just talked about back in the day, we used to call that basket trading. But what I'm teaching you right now is sector rotation and amplifying your conviction in an idea, because a lot of money is flying into that idea at the same time. So it's kind of an important thing to pay attention to. And quite honestly, it's a pretty easy way to have conviction when you buy a stock. Be like, wow, look at all the other money flying into that group at the same time, versus you might be looking to buy LI and they're not all green. One's red, one's green, one's, they're kind of all over the place. That would decrease your desire or your game plan to get heavy or to trade bigger share size, or maybe even to hold longer, because it's not in harmony. That's the language that we use in our boot camp. It's not in harmony. So those are the three stocks in consumer cyclical that I'm looking at heading into this week. So now we're going to work our way over here to communication services. They actually had a pretty good week. Not really that awesome on the month or on Friday. A lot of stock kind of traded pausing on Friday, but these guys actually had a pretty good day on Friday last week. So the first one we're going to take a look at is T-Mobile. And you can see actually T-Mobile actually has a pretty nice breakout level. And we're actually going to be looking up towards that area. So right around the 150 area. So we have roughly $12 to move. We also have relative strength on this stock. And you can see it's actually already up a little bit here. Electronic Arts, which has been absolutely a beast. Again, if we go over to the weekly chart over here, once, twice, 3, 4 weeks in a row of buying. Now, the challenge here is there's a little bit less obvious profit potential. We're looking at basically 142 to 147. So game planning for EA, despite it being one of the strongest stocks over the last 4 weeks, if you're a regular viewer of the channel, you know that we spend a lot of time talking about the optimal entry. And by the way, if you haven't done so already, please do me a favor. If we're providing some value, please do me a favor and hit that subscribe button. So EA is a little bit far from the optimal entry. So we still like the idea, but there's only $5 profit potential. So in this case here, it's a stock that has obvious order flow. The tape, using our tape reading skills, looks really good, but the upside potential, remember we said trade expectation, the profit target that we're shooting for, the trade expectation is obvious. Likely, doesn't mean it's definitely going to, it's likely to move up towards that 147 level, but the profit available on that trade, because there's a big wall of resistance up there, looks like it's roughly only about $5. And we have to respect the fact that that's the place where sellers, look at that, continue to shove this stock down. So think about this trade. Now think about this, like really think this through. If $5 on this trade, based on where it's looking like it's going to open right now, is the likely max profit potential on this trade, because sellers keep shoving it down at that level, what is the maximum risk for that trade? Well, if you're looking to make 3 to 1 on your trade, risk $1 to make 3, that means that there should be no more risk on this trade than probably around $1.50 if you're looking to trade it. So now we're actually getting into the trade management of the position, which it's kind of fun because you're really mapping it out before you even do anything. So once the market opens, you're like, all right, I know what I'm going to do. It's already on my sheet. Let's see what happens, right? All right, so EA, we're mapping out consumer communication services right now, and EA and TMUS. Next, we're going to take a look at NTES. So again, above the 50-period moving average, you got a push and a pause, a push and a pause, a little bit of a resistance level here, but we can't ignore the bullish tone to the market. We've actually had a nice 3-week rally, and again, this is where we're going over to the weekly chart. We have a bullish U-turn where it traded down and reversed, went higher, higher lows, higher highs. So well bid, well bid, well bid. A little bit of selling last week and a little bit of a wall up here, but we do have relative strength. So what does that mean? How would I actually trade this stock right now? Well, if we know it's bullish, it's been buying pressure for the last 3 weeks, and we know that there's a little bit of overhead resistance, then the question we would say is, well, what's beyond that resistance? Is it worth putting money on? And I'm going to show you what I mean by that. So if we break this down a little bit further, you can see that the next wall of resistance past this is all the way up here around 117. And right now we're around 106. So that roughly makes $11 or $12 profit potential. So for me at this point, this would be what I would call a two-step trade. I'd put the first piece on the first sign of the stock rallying, expecting it to pause around that 108 level. If it pauses around the 108 level and pauses on lighter volume, then I would expect follow through up to that 117 level. Only then would I put this second piece on. So I'd be working my way into this bullish trade in one of the stronger sectors from last week. So the final one that we're looking at on communication services is one that's a little bit less obvious, and this is Zoom. Zoom actually rallied pretty strong off of the longer term move to the downside coming off of earnings. And let me actually get this off the screen right here, right there. So if you can see that we actually broke down and now we have done that. So if you're, again, if you're a regular viewer of the channel, you know that we actually had a nice little failed test of the low here. Then earnings came out here. Earnings rallied pretty hard. And now we're pausing with the rest of the market. Remember, that pause is actually healthy for another move higher. Minimum resistance going to be looking at is up in this 126 area. So we still have around $15 move to the upside. Okay. So now we're going to work our way over into another sector. And believe it or not, if you don't know, as interest rates go up, that's generally not good for technology stocks, because technology stocks are normally known as growth stocks. Growth stocks usually fuel their growth by borrowing. So lower interest rates is usually good for technology stocks, but now technology, it should be affected in a little bit bigger way because interest rates are going up. But we found some pockets of opportunity on the technology side that we're going to take a look at heading into this week as well. And these stocks will definitely be in the game plan. So working our way over here. And again, this is remember how we just talked about before, we talked about put all of those stocks in the electric vehicle group into a watch list so you can pay attention. Is buying orders flowing into that group? The more green they are in the time frame that you plan to hold the trade, the better. So now some of the technology stocks that are showing buying pressure for this week and last couple of weeks heading into this week are solar stocks. So we're going to keep an eye on those right now. So some of the solar stocks that we're looking at, we have Nova. Again, you can see really clean price action, a push and a pause, a push and a pause, and looking for this to rally. Next level is probably up here around 26 and change. Then we have Sunrun, and we have ENPH. So those are really the top three in the solar group that I'm watching. Then we have IBM. IBM has actually been pretty strong as well. So again, we want to zoom out here and respect the bigger picture so we can get a bigger 138 has been the big level. We have a little bit of resistance here, a little bit of resistance here, But more importantly, let's go back out to the weekly chart of IBM and look at the last 2 weeks of buying pressure. That's pretty strong. So again, if we take a really quick look at which stocks are defying what the market is doing, and we call that relative strength, IBM has had some pretty good relative strength over the last 2 weeks. And we can actually take a quick snapshot of that. If you see what IBM has been doing here, we've got a nice reversal here to the upside after it closed on the lows, higher highs, higher lows, and then another week, higher highs and much higher lows. So what does that mean in IBM? That means somebody's holding the bid and paying higher prices. That's a lot of what we do. We take a look at order flow. We're looking to piggyback, track, stack, and piggyback what the smart money is doing. And then we use our tape reading skills to hop on board as long as we're good near the optimal entry. So this is a list of some of the technology stocks that I'm going to be watching this week. And let's actually put the daily chart back on there and the moving average. So you can see it's clearly above the moving average there. So IBM, we're also taking a look at Hewlett Packard, which is right near a breakout level. AMD, which actually has had some pretty good news. I also want to keep an eye on AMD news this week. Here's some bigger news coming out this week. AMD, if we scroll down, obviously looking at the consumer data and get a little bit more into the news for AMD right here. Financial Analyst Day on Thursday, I believe it is. So keep an eye on that heading into the week. Also, consumer sentiment coming out this week. We also have Amazon stock split this week. So there's a bunch of stuff going on. Actually, Amazon stock split today. I actually got a bunch of questions about that as well. With the Amazon stock split coming out today, do I plan on trading it? Heck yeah. Are you kidding me? 2,400 down to 123. It's going to be in play this week. It's going to be a very interesting stock to read the tape on this week. Obviously, the order flow has changed dramatically where it's kind of been sideways to bearish, rallied a little bit last week, but Amazon opening up, I think it's going to open up somewhere around 122 and change, something like that, maybe a little bit higher. Let's actually take a look at that. 124 and change actually right now. So we're actually going to be keeping an eye on that today to be actively trading it. So again, I just want to finish up the last two on the tech side. Again, AMD pushed lower, finally breaking out of this longer term move. But I will tell you this, if you're a little bit more on the financial side of things, Franz, thank you for that. Appreciate that. On the financial side of things, AMD had just amazing earnings last quarter, expecting amazing earnings, probably more of what they're going to talk about on the analyst meeting. It looks like it's on Thursday. This has been one of the stocks that I've been really actively trading because volume has been there, volatility has been there. It's had a reasonable catalyst pretty much every week where it's active and you can get involved in it. So AMD is actually one of the stocks that is showing some relative strength this week as well. You can see it continues to make higher highs. It's continuing after this double bottom support. Now it's making higher lows. So this stock is pretty interesting. And one that's kind of off the beaten path that we haven't traded in a while is Bumble, actually. BMBL showing some relative strength, resting right at this breakout level. Has a little bit of resistance up here in this 3750 area, but if it can break through there, then we're looking at this gap fill up here to 47. So this is going to be a little bit of a slower trade to the upside, but something that's pretty interesting. If we hop our way over to the other side of the market and these healthcare stocks, these guys were part of the strongest area of the market for a while, and they have kind of took a nosedive over the last week. And you can see they were the worst performing sector this week. So if stocks roll over, that's going to be one of the areas. And shockingly, consumer defensive actually hitting the bids as well. Yep, exactly, Franz. NVIDIA as well. That's true. So some of the ideas, and again, remember we said that we want to make sure that we're prepared on both sides of the market. So if the market should happen to roll over, go down, show some bearish price action, of course you want to be ready if you understand short selling to look at ideas. And some of the ideas that we're looking at on that side of the market are coming from consumer staples. So I just want to give you a couple of those just so you're super prepared for the entire week. So if we go over here and we're taking a look at consumer defensive, some of the ideas in this area that we are looking at on the short side of the market, Walmart actually had some news that you thought would have been positive last week, but it's still actually bearish right now. Abercrombie and Fitch also still bearish right now. And finishing this up with Disney. Disney actually and the streaming services are actually seeing a lot of selling pressure as well. Netflix bounced a little bit last week, but still really not much going on there. So we just covered a bunch of stuff. You might need to watch this video more than once because I'm giving you ideas for the entire week. So it's going to be super interesting to see how the stock market unfolds this week. We talked about the best stocks to buy now, some stocks that we're planning for the week. We talked about the CPI data, what that means for inflation. And to throw on top of all of this, next week is the Fed announcement. So we have a lot of stuff going on this week. CPI data with the Fed announcement next week, which should add some more juice to the active everyday volatility that we've been seeing. So it's absolutely been amazing. If you're not familiar with how we go through stocks and sector rotation, all that kind of thing, I'll post a video up here at the end so you can actually take a look at that. It walks you through how we do sector rotation. So a lot of stuff. I hope you have an amazing, amazing, profitable week this week. Remember, if the market is kind of consolidating and not doing anything, be smart. Maintain your discipline and let the market tip its hand before you get involved. Thank you so much for joining me today. Do me a favor, smash that like button if we've provided some value, and make sure you subscribe too. Have an awesome day, everybody. I'll speak to you soon.